Hey guys, welcome. We're going to talk about another SPAC on this video. The target of this one is a company called Origin Materials. The SPAC itself is called Artius Acquisition. The ticker symbol is AACQ. They trade on the Nasdaq. And basically the story on this one is sustainability. These guys have a technology to produce plastic in a way that reduces the overall carbon footprint. So it's very much a pure play ESG story, sustainable investing, environmentally friendly, all that kind of thing. So there's an interesting story here that I want to tell you about. I want to do a bull and a bear case. So I've got 5 points here that draw out the bull case for this company. I got 5 competing points that build a bear case. And at the end, I'll give you my opinion on which case is stronger. Let's go. Okay, so let's dive right in here and take a look at what the company is and what they do. And there's a slide here from their investor presentation that I think does a really, really good job of explaining it. Basically, what they do is they have developed a technology where they can take biomass feedstock, so sawdust, wood chips, all this kind of thing, and then through their technology and through their processes, they can actually use it to produce plastics and then use that plastic, drop it into the supply chain, and then their customers can use it to do all kinds of things that we all do with plastic, right? So bottles, textiles, packaging, paint, coatings, epoxies, you name it. Basically, they have a cleaner way of producing plastic because today, of course, plastic is made directly from petroleum products. So instead of making it from oil-based things, they're actually going out and using biomass. And then the carbon that would otherwise have been released from that decaying biomass is captured in a way and then used in an industrial process to replace plastics that would otherwise have been produced from petroleum. Okay, so what's happening in the deal here? Well, Artius is looking to take these guys public through a reverse merger. I've talked a lot before on the channel about how these SPACs work. Basically, Artius is coming in, they're injecting cash into Origin. The intent with this cash injection is basically to fund these guys through to profitability. They claim here it's going to take a few years to get to that profitability mark. There's a few things about the deal that I like here. The valuation to my mind doesn't seem too crazy. They're looking at a 1.8 pro forma equity value. And what that means is that after the cash from the SPAC company is injected into Origin, the entire thing will be worth 1.8 million, but that includes $725 million of cash that's being injected right into the balance sheet. So I think given what they're looking at here in terms of revenue and enterprise value, this is not completely nuts like some of these SPAC deals are. I like the fact that the founders here, in terms of their equity, they actually have some shares that vest at different price thresholds at 15, 20, and 25 bucks a share. So this is a good story because it reduces the possibility that founders are going to dilute and dump their shares post-deal. It sort of gives them an incentive to, grow the company and stick with it as it tries to reach these price targets down the road. The pipe is pretty reasonable in this one. We're only looking at $200 million of pipe financing. So again, that reduces the potential for a massive dilution right after the deal. And go forward, the ownership structure looks pretty balanced as well between shareholders, the SPAC itself, and a modest investment from the pipe. If we take a look at some of the names behind the deal, if you look at the team here on the Origin side, I think they look really strong, really, really strong background in chemical engineering and business. These guys have gone to some impressive schools, and I think there's some good credentials here on the Origin side. On the Artius side, it's a little bit interesting what happened here, and we've seen this before in these different SPACs. Originally, Artius was going after a fintech target. They couldn't find one, and they pivoted to Origin. Now you have guys with a fintech background coming in on the SPAC side, looking to acquire a more industrial-oriented chemical company, whereas these guys have a background in fintech. So, ideally, I don't want to see this. Ideally, I want to see deep experience in the industry vertical on the SPAC side as well. And hopefully the SPAC is actually injecting some of that expertise into the executive team. I don't necessarily see that happening here. These guys have a background in fintech that's not really applicable. So, who knows? Maybe they're smart executives and maybe they can add some value in the long term, but still, it's a little bit of a mismatch that I'd rather see a more perfect alignment here on the executive teams.
What's the upside potential?
So number one here is I like the fact that these guys are coming to market at the right time. So if you look at it socially and politically, there's a tailwind behind these companies. Everybody wants to see a solution to the plastics problem. I think that the Biden administration is talking about reintroducing the social cost of carbon. That's going to increase awareness and I think get some momentum behind political and regulatory change that will only benefit these guys. The U.S. has rejoined the Paris Agreement, so there are real solutions that are going to be needed now to meet those goals. That's another tailwind. There is talk of a carbon tax in the U.S. I personally don't think it's going to happen anytime soon. There's actually been some headway on that front here in Canada and some other countries. The U.S., though, I think politically that's a bridge too far in the current climate. But who knows, in the future, maybe it will happen. But in any event, I think there are a lot of drivers that are all lining up in the same direction that, again, will only benefit these guys. So they make the point here that their technology is drop-in ready in the existing supply chain. So this is a really, really important point because anytime you try to modify the current supply line in terms of plastic containers or packaging or what have you, it's an engineering problem, right? Is the replacement technology as good or better, hopefully, than the current plastic solution? So the current plastic used in most bottles today is PET, and really this idea of manufacturing PET plastic from biomass feedstock. The great thing about it is that bio-PET, as they say, biologically sourced PET plastics, it's identical to PET plastics that are made directly from petroleum. And so you don't have that engineering problem, right? So that's why it's drop-in ready. You can absolutely replace an existing PET bottle with a bio-PET bottle or container or package or whatever it is, and not have to worry about its performance under different temperatures and different stress loads and different shipping conditions and all that kind of thing. It should be functionally identical. So, the barriers to adoption are really minimal in terms of their ability to produce this type of plastic. And the next point follows on from that. These guys have had a long-standing partnership with three enormous companies that are users of PET plastic bottles in their manufacturing process. So Danone, Nestle, and Pepsi are all aligned with these guys. Not only that, but they're investors in the company and they are key partners within the company. They're actually buying and using the products, right? So I think that's a really, really strong story. You have a strong commitment from companies that are highly incented to reduce their carbon footprint and actually use the products that this company is actually going to produce. And they're really, really tight with them, even to the extent of being equity partners. So that's all good news all around. And the next point here I'll make is that there are significant takeoff agreements in place with these guys. A takeoff agreement is basically saying, hey, if you build a plant and produce this much product, we are guaranteeing basically that we will buy it if you produce it to spec and all this kind of thing. So it gives a company the confidence to go ahead with that huge CapEx expenditure to actually build a new plant and start producing this kind of stuff when those takeoff agreements are in place. So it's a really, really great story that they have some committed revenue in place if they actually build out the capacity that they're supposed to. So that's really, really reassuring, that they're actually going to have some revenue as soon as they're actually up and running with the plant that they're building. The last point I'll make here is the total addressable market. Right now the focus is on PET containers, for water and soft drinks and that kind of thing, because those are the partners that are lined up initially. But there's a lot of potential applications that go way beyond this. There's no reason at all why this bio-PET can't be used in a lot of applications that have very little to do with packaging, right? It goes well beyond that. And so, the growth vector for these guys, if they can tap into those additional markets, it's really, really impressive because these other companies that use plastics in all of these different applications, they have the same problem. They also need to reduce their carbon footprint. And if this is a viable solution, then there's a lot of additional revenue sources for these guys potentially into the future. Let's talk about risk. Okay, so what's the bad news? Let's take a look. So right off the bat, I'll say that bio-PET plastics are not biodegradable. The interesting thing about using biomass feedstock with this company's technology to produce PET plastics is you actually are producing PET plastics. It's functionally identical and it is not biodegradable. And so yes, you're reducing the carbon input on the front end to produce these plastics, but at the end of the day, you're still producing single-use plastics. plastics that are subject to the exact same problems as the plastics we produce today from petroleum, right? They're still going to get thrown into the ocean. They're still potentially going to get incinerated and release the carbon back into the atmosphere. They're still going to end up in landfills in places where the recycling system is not strong. So it's not really doing anything to solve the back end problem that we're all experiencing within plastics. My fear on the bear case is that governments, regulators, customers, end users will all, see this and not be as excited about this front end carbon capture story as they would be about a different solution that can actually reduce plastic use on the back end. And I'm in the same boat, really. That's really the story I want to see in terms of reducing our plastics problem on the planet. I want to see a back end solution. This front end solution is not quite as exciting. Point number 2 here is that there is a competing technology with BioPET, and it's called PEF, P-E-F. It's a polymer-based solution to producing plastics. Now, it's kind of apples and oranges from BioPET. It has different engineering characteristics. Sometimes it's better for some applications. Sometimes it's not as good. So it's really hard to judge whether the right approach right now is BioPET or whether it's PEF. There are competitors to these guys that are moving directly to producing PEF packaging, and they're skipping this idea of using BioPET as an intermediate stopgap solution, and they're going direct to what most people would say is the better end state, which is a PEF application for a lot of these containers and packaging solutions. And PEF has a number of advantages. One of the ones that I like a lot is the fact that it can be incinerated cleanly, and it is a lot easier to recycle. One of the common criticisms of recycling is that there's a bit of a lie out there in terms of consumer perception and in terms of how effective recycling it is. It's not that great, but PEF is actually a lot easier to recycle than PET, and so in theory it should actually step up the effectiveness of recycling. And again, the fact that it can be cleanly incinerated, it's actually doing a lot more potentially to reduce that back-end plastic problem that we have today. Now, arguably though, all that said, Origin does have a path towards PEF. They're not placing all their eggs on BioPET. They're saying, hey, we're going to get there. We have a timeline to adapt our technology towards PEF. And so, if they get there, then yeah, maybe they've mitigated this particular point on the bear case. My fear, though, is that others will leapfrog ahead of them and get all the way to a PEF product that makes these guys redundant in the short term, and maybe they win the race overall. And speaking about winning the race, these guys have a problem here in terms of profitability, to my mind. They're really early stage. I personally don't think they're ready for public capital and the public capital markets in terms of investment. I think that they are too far from profitability. On the one hand, that's what SPACs do for us, right? They expose these early stage public companies to us, the retail investors. They allow us to get in early. But on the downside, we're now taking on all of that additional risk, right? These guys have a longer run towards profitability. A lot of things can go wrong in the meantime. And I think in that short term, if we were to buy now, there's a lot of risk that there's further downside price action that we're going to have to actually hold the stock through, right? And that's risky towards retail investors. The fourth thing I'll say here is that I always look for a moat in these technology-based companies. BioPET is an old idea. These guys certainly don't have a patent on the idea of BioPET itself. They're making incremental improvements, and they have more cost-effective ways of doing it and all that kind of thing, and they have some patents. I'm not entirely sure how deep their patents go. At least some of their technology is licensed from Eastman in a non-exclusive deal, So I'm not really seeing a tremendously wide moat. I'm kind of looking at this and thinking, well, how tough would it be for somebody else to do the exact same thing and make it almost or just as cost effective? I'm not sure, but I'm not really seeing the wide moat that I would look for in an investment. And the last point I'll make here is I'll go back to this TAM slide and take a look at the total addressable market. Yeah, it's a big market. A lot of this market, though, is not in North America. These guys are a Canadian company, and they're well positioned, I think, to sell into the North American market. But how well positioned are they to sell into the Chinese market, the Indian market, that actually uses a lot of these plastics products in manufacturing? Are they going to be able to actually, capitalize on any kind of export opportunity? I really don't think so. So I think their actual total addressable market is a heck of a lot smaller than they're claiming. And to date, they have no demonstrated ability to penetrate into any market beyond, BioPET packaging. So if they had that agreement, if they were into textile profile. So if they were into some other industry vertical, I'd have a little bit more confidence. But really, I think their TAM is overestimated. And again, no demonstrated ability to go beyond bottles. Okay, so let's wrap this one up. So the bull case here is based on the ESG story, right? It's a really, really good sustainability story. I think that there's a tailwind from all of that in terms of a policy and a regulatory framework. So that's really what the bull case is speaking to. The bear case, on the other hand, is based on a relatively narrow moat. I'm worried about these guys from a competitive standpoint. I'm concerned about how long it's going to take them to be profitable, and I see a lot of risk over the next 2 to 3 years. And I'm not entirely convinced that the potential upside is massive enough to justify what I'm seeing as the downside risk on the bottom side. So I would love to see these guys succeed, right? I really think we have an enormous problem to solve here with plastics, and I love the fact that anybody is trying to solve that problem. So I'm a cheerleader for these guys, right? I would love to see them succeed, but in terms of an investment and a good place to put my money, I'm not entirely sure these guys are the best bet. Even on the technology side, right? I think that I get way more excited about a more disruptive technology, a technology that gets us all the way to a more impactful solution to the plastics problem. And I personally believe, after having looked at this technology, that going all the way to PEF is potentially a much better solution than this stopgap measure. And so I'm going to say that on this one, unfortunately, I think the bear case is a little bit stronger. So guys, that's the story. I hope this was useful to you. Please give me a thumbs up in the video. It really helps the channel. And subscribe, ring that bell. I'll see you on the next one.